Good afternoon and welcome to Matters Financial and Geopolitical from a Frontier. Let me start with some tweets that I've been reading from Raul GMI. Well worth following and extremely incisive in point of fact. And he says, we're at the most important juncture in FX markets in my entire 30-year career. The dollar appears at risk of an uncontrolled rise. Let me show you. Have a look at his Twitter feed because he's got a very interesting thesis. And he says the big disturbance in the matrix is the Chinese yuan, which conceivably could go to new all-time lows, highs on the chart, versus the dollar. Over the weekend, I said the most important currency to watch right now is the Chinese yuan. And I was writing on Sunday to be published on Monday, and I'd said it could slice through 7 like a hot knife through butter. And we're currently at around 706.80. China's hand is stronger than Trump thinks, is an article in Markets. US President Trump seems to think he holds the stronger hand in any currency war with China. Don't bet on it. The yuan is under siege, thousands of companies are abandoning the country, and massive amounts of money are pouring from China into the US, the president wrote in a Twitter post over the past few days. The suggestion is that Beijing's hands are tied by the risk of capital flight. China's last attempt to stem capital outflows was disastrous. Between 2015 and 2016, Beijing spent about $800 billion, or 20% of its foreign exchange reserves, to stabilize the currency. In 2015, a main channel for capital to exit China was currency arbitrage. The offshore yuan traded at much weaker levels than the onshore currency because of the absence of daily trading restrictions. Banks and state-owned enterprises with offshore accounts could earn easy money by simply selling the yuan in mainland China and buying the currency more cheaply in Hong Kong. Now, on Thursday, China set its yuan fixing weaker than 7 for the first time since 2008. While the headlines may suggest that the government is weaponizing the currency, the reality is that Beijing has been very gentle. China still wants a trade deal and is extending an olive branch. Trump would be wise to realize that before patience runs out in Beijing. And I agree with that. I think the yuan has the US stock market by the short and curlies, as it were. And I wonder if Trump and Mnuchin have appreciated this Sun Tzu level move. And the point has been made with a lot of finesse and etiquette. And essentially what I'm saying is if they weaken the currency, they're showing that there is a direct correlation with the US stock market. And therefore I also tweeted to POTUS, I think I would tread very carefully now. Sun Chartist has various predictions for the quarter 4 forecast, clustering around 690. And I think that's unlikely. The Fed broad trade weighted dollar index is incredibly close to breaking the enormous cup and handle pattern at 130, barely 0.5% away. That's Raul. And over the weekend, I said, President Trump keeps talking about weakening the dollar. I find it curious that such a stable genius has yet to calculate that a strong dollar is infinitely better. And if he is serious about his warfare strategy, He needs to add currency warfare to his tariff, sanction, and linguistic warfare arsenal. My perspective about the dollar is this, and note well it's just a fraction under its 2019 high, even after a rate cut, is that there is very little President Trump can do. In fact, the risk is that when the market sees he is powerless, the dollar might lift off like the proverbial parabola. 24th of June, I was writing about the bond markets and I characterized it as a Wizard of Oz world. And to wit, have a look at this tweet from the bond freak. Wow, he says. And that confirms what I wrote on the 3rd of June when I said bond yields are in tilt mode. Home Thoughts, I Like This by Mohamed Melehi, untitled 1975. He went on to adopt the spray paint in industrial car paint colours, which he saw as very frank colours in the spirit of the Moroccan palette. No half tones, the colour comes straight from the can. I ally myself with the traditional artisan in a studio in a popular neighbourhood. I work with the radio on and the door open. He often worked collaboratively, demystifying the brush stroke. And this is another of his, untitled 1980, in the Loft Gallery. Political Reflections, Scavino45, who's the president's social media wizard, said the president was treated like a rock star inside the hospital, which was all caught on video. They all loved seeing their great president. And I'll leave that for you to decipher. Twitter Trump always overcomes teleprompter Trump, says the wise old woman, and I think that's an important point. Ambassador Rice, Susan Rice, wrote in the New York Times, our domestic fault lines remain our greatest national security vulnerability, and race is our oldest and deepest rift. When the president deliberately and repeatedly rubs salt in those wounds while coddling the authoritarian opponents who exploit them, we must reluctantly ask ourselves, is he playing on America's team? I touched on this on the 22nd of July in an article I wrote called The Showdown, which was specific to the four horsemen of the apocalypse, as Trump has called them. Humiliating Kashmir is part of Narendra Modi's plan to remake India. This is The Guardian. Either way, Modi, a consummate method actor, was playing the conservationist. He added this role to an extensive repertoire: poet, sage, statesman, he-man, yogi, that he has deftly deployed to craft a cult of personality unrivaled in the democratic world, not least for a man who was once widely castigated as a Hindu supremacist. Amit Shah, Modi's dreaded enforcer and the minister responsible for law and order, clarified in Parliament that urban Naxals, a label that encompasses everyone from left-wing intellectuals to ruthless cosmopolitans, skeptical of the Modi regime, will not be spared. Kashmir is now under the thumb of the union government. The region's elected leaders have been thrown in jail. Communications, including landlines, have been cut off. Ordinary Kashmiris have no means of speaking to the rest of India. The most monumental redesign of Delhi's constitutional arrangement, with India's sole Muslim majority state hatched in secrecy, occurred without a debate in Parliament. Modi's willingness to take the risk was in no doubt dictated by the reward. He has in one stroke ground down and humiliated Kashmiris and held them up as an example to other Indian states. The termination of Kashmir's special status is simultaneously a culmination of long-standing Hindu nationalist yearning to domesticate the region's dissenting Muslim majority and a successful test case for the project to remake the entirety of India in accordance with Modi's ideology. One country, one system, Modi's acolytes cry with sadistic glee at Kashmiris who are curfewed and cut off from the world. Next week, India will mark 72 years of independence from British rule. For many Indians, forced suddenly to pledge allegiance to a de facto one-party state under one supreme leader will be the beginning of an inquisition, not an occasion for celebration. I concluded by citing Gaza, Kashmir, and Xinjiang. International markets Chinese trade sources tell us that China expects 10% tariffs on an additional $300 billion, which will be added on September the 1st. These sources also say China expects that 10% to go to 25% because China will stand firm and not buy US agriculture. And I said China is now playing the game in US trading hours. That came out during trading hours, and I was referencing May 2019 when I was saying Trump is highly tuned to the markets and is in fact something of a 21st century artiste. His positive trade war tweets are timed around the US market hours and designed to soothe, massage, and finesse US asset prices, and he turns more negative in Chinese trading hours, and he's getting a bit of his own treatment back. My last article was What's Your Road, Man? Holy Boy Road, Madman Road, Rainbow Road, Guppy Road, any road. It's an anywhere road for anybody, anyhow, where, body, how. And I said, Boris, I was quoting the Telegraph's Daniel Hannan, isn't bluffing. Every action, every appointment, every word since he entered number 10 signals the same thing. Britain is leaving the EU on the 31st of October. And yesterday he repeated this: we're going to fulfill the repeated promises of Parliament to the people. And essentially my conclusion was that sterling will continue to drop. Euro, let's go to the currency markets. Euro is at 122.5, 122.25. Dollar index 97.481. Japanese yen 106.06. Swiss franc 0.9753. The pound 121.65. The Australian dollar 0.6780. Good rebound after yesterday's sell-off. India rupee 70.84. South Korean won 1208.6, Brazilian real 396.86, Egyptian pound 16.55, and the rand 15.0093. Dollar index 97.48. I think we might go a little bit lower, but then we'll move higher again. Euro dollar got a bit of a boost of late, 122.27, and I think it's all about the short covering of carry trades where people have funded the purchase of the rand and the like with euros, and you saw quite a big blowout in those emerging market currencies, forcing people to stop loss their positions. The pound is drinking at the last chance saloon. It looks like it is going to parity. That's Raoul again. My article over the weekend, as I watched the pound fall like a stone, I could not help wondering if this sterling moment is precisely like it was in 1992, a no-brainer. And then Raoul again, Bitcoin is doing its job of suggesting an alternative system is gaining in probability. It trades like call options on a new system. In my mind, he said, the price moves are so enormous, and thus the increase in probabilities is so fast that you have to use log charts. And that goes back to, it's a curve, each of them feels unmistakably it is the parabola. They must have guessed, once or twice guessed, and refused to believe that everything always collectively had been moving toward that purified shape latent in the sky, that shape of no surprise, no second chance, no return. Bitcoin, in my considered opinion, has never been about its utility, but all about its safe haven, non-correlated asset status. Gold, which crossed 1,500 for the first time since April 2013, was last at $14.98 and 30 cents. I think it's overcooked, but I thought it was overcooked at $14.40, and we're now here. And it's all about the reduction in interest rates and the fact that you might as well hold gold and be penalized for holding other currencies. Silver, short-term top might be in. This is T commodity. Silver tends to be gold on steroids. Crude oil, my goodness, what a trading range. Last at $52.50. But we got to $50.50 yesterday before the Saudis jawed the market. India, of course, delivered a bigger than expected 35 basis points cut to spur the economy. The stock market remains in the doldrums. The Korean Yuan, this is Raoul again, this is one of the most crucial levels in its history, he says. And I agree with what he's saying now. He's saying these big wedge patterns tend to resolve in explosive moves to new all-time highs for the dollar. February last year, I wrote a piece about the end of Halcyon days. And Halcyon days is from the story of Halcyon, the daughter of Julius and the wife of Sikhs. When her husband died in a shipwreck, Halcyon threw herself into the sea, whereupon the gods transformed them both into Halcyon birds, kingfishers. When Halcyon made her nest on the beach, waves threatened to destroy it. Julius restrained his winds and kept them calm during 7 days in each year, so she could lay her eggs. These became known as Halcyon days when storms do not occur. Today, the term is used to denote a past period that is remembered for being happy and or successful. To wit, key juncture on the JP Morgan Emerging Markets Currency Index, new lows await any day now. That's Raoul. Emerging market stocks down for the 11th day running. 12 is the all-time record. Sub-Saharan Africa, China's new 2019 Defense White Paper, what it means for Africa. This is from Paul Nantulia in the Habari network. First, China's global reach has grown considerably and its foreign policy is more assertive and competitive, themes the White Paper touches on in each chapter. It paints a picture of a confident China determined to restore itself as a great power and directs the People's Liberation Army to stand ready to provide strategic support for the realization of the Chinese dream of national rejuvenation. The Chinese government has given itself the task of doubling China's 2010 GDP of $12 trillion by 2021 to become a moderately prosperous society. And 2049 is the target date it is set for China to become a world-class power, and by 2050 China hopes to be a world maritime power. China's national defense in a new era underscores the globalization of China's evolving national security and the improved power projection need to advance China's expanding overseas interests. Big powers are the key. China's periphery, I've spoken about that several times, the priority, developing countries the foundation, multilateral platforms the stage. The strategic mapping is evident in the massive One Belt, One Road, described in Chinese, more commonly known as the Belt and Road Initiative. China is building new economic corridors linking Asia, Europe and the Middle East and Africa and connecting them to its economy. OBOR is a major driver of China's recalibrated security strategy and shapes many of the new missions and tasks the white paper assigns to China's armed forces. So-called five connectivities of the Belt and Road, strategic infrastructure, policy coordination, trade, finance, people-to-people exchanges, constitute the physical elements of the community of common destiny. China's elite counter-terrorism forces, the PAP's entree into African countries like Ethiopia, Kenya, Uganda and Zambia, mention of Far Seas forces is particularly relevant for Africa because Chinese military authors use the terms Far Seas and Far Seas operations to refer to far-off maritime domains beyond the Western Pacific to the Indian Ocean, where China's presence is growing. China has also capitalized on its role as the world's biggest contributor of peacekeepers and second largest contributor to the UN's peacekeeping budget. Africa presents opportunities for China to expand the Belt and Road, and then in 2017 the gross annual revenues of state-backed Chinese engineering firms in Africa totaled around $51 billion, 10 times larger than China's average foreign direct investment into Africa since 2007. Over 70% of Africa's communications infrastructure has been built by Chinese telecoms giant Huawei. StarTimes similarly edged out its competitors to dominate the African media market, beaming Chinese content to 10 million rural subscribers in 30 countries. Chinese government's tendency is to view Africa as an opportunity, despite the risks, will continue to shape the larger context in which China's engagements will continue to expand as envisaged in the white paper. I wrote about this in August 2017, China Rising. In that same article I said Xi Jinping's One Belt, One Road program binds the world to Beijing because all the roads and railways have but one destination, and that is China. And then I've written severally about how the tinderbox is the periphery. December 2018 I wrote about the truce dinner, Huawei and Dis. China Everbright Bank has placed Zimbabwe on a list of countries it will not be dealing with. The list, titled Unilateral Sanctions, is a notice to bank officials and places Zimbabwe under similar regulations. It is fleeing from Western financial institutions. That's not a good sign. Glencore earnings fall 32% on lower metals prices. Glencore's African copper division reported a loss of $315 million in the first half of the year due to higher costs and lower prices. The company said it would shut its largest cobalt mine in the Congo at the end of this year due to lower cobalt prices, which have fallen by over 40% this year. Glencore's trading arm was forced to take a mark-to-market loss of $350 million on about 10,000 tons of cobalt inventory it owns, but is yet to sell. Net income was $226 million in the first half, down 92% year on year. Angola and Zimbabwe operations SAP Distel, whose brands include Niederberg wines and Three Ships whiskey. Earnings fell in the year to end June as it took a hit on operations in Angola and Zimbabwe. and that speaks to the weakness of those countries. Reserve Bank's Kangango spurns talk of South Africa needing IMF aid. We're not there yet. These things are in our control. We've got to be able to take those decisions and make those trade-offs, then we wouldn't have to take the bitter medicine. The rand, of course, crossed 15 again yesterday, but is slightly inside it today. We don't have to get there. Ganyango said these problems are within our grasp. We know exactly what must be done. The South African all shares up 4.72% this year. Dollar versus rand, this is a 6-month chart. Egypt pound, solid as a rock at 16.55. EGX 30 up 6.48% in 2019. Nigerian all shares down 12.78% in 2019. Ghana Stock Exchange Composite Index down 7.27% in 2019. Kenya is seeking 150 billion shilling syndicated loan. Loan will mature in 6 years, will come with an interest rate of 645 basis points above LIBOR. Parliamentary Committee has recommended that NBK's principal shareholders, the Treasury and NSSF, reject KCB's offer. CFC Stanbic reported half-year earnings per share grew 14.349%. Financial investments, 94 billion shillings, that must be Government of Kenya's bonds. Loans and advances to banks and customers grew 14.964%. Total income up 14.844%. Big increase in credit impairment charges, charged 1.234 billion, up 387%. EPS was up 14.349%. And then they paid a half-year dividend, which is 44.44% lower than last year. It's a cheap share on a P of 6.2 and a price to book of 1.1. WPP Scangroup reported half-year earnings per share grew 4.082%. Half-year billings were up 12.664%. Profit before tax up 28.762%. Earnings per share up 4.082%. I think headline billings growth of 12.664%, which might be correlated to the purchase of TNS Kantar, but nevertheless is a positive development. East African Cables reported half-year earnings per share surged 351%. Turnover down, however, 19.899%. Profit before tax up 308%. Basically, no dividend, and they're chasing profit over headline revenue growth. It is indeed interesting to note that profits from operations were 144% of revenue, according to MIR. Nairobi all share up 4.49% year to date. NSE 20 down 10.18% year to date and at a 10-year low. Thank you for stopping by.